I went on vacation last week. I come back to these charts, David. What they're calling this? They're calling this Black Monday
Black Monday.
vibes. All right. So can you get me up to speed? Because I haven't paid attention to this. I just started looking at it this morning. Can you get me up to speed on what the heck happened? I haven't seen one of these in a long time.
So the markets have really been rolling over for like 2 weeks now. The equities market, the tech market, it started off with just like Nvidia just selling. A lot of tech stocks selling, people rotating out of the AI stocks that had pumped.
When was this? Like last Friday? The end of the last week?
This has been the last like 2 weeks of traditional trad equities market discussions of just like, oh, like we're having a pullback. We're having a tech stock market AI pullback, but that pullback kept on pulling back. And it hit an inflection point over this weekend. And now has kind of impacted just broad markets, global markets. So all global markets, this is not just a crypto thing. This is if you are in the world of money and finance, if you're in the world of just like equities, traditional markets, however you want to say it, like you're paying attention to this. The SPY, the American equities market, is down at 4%. Taiwan down 8.5%. South Korea halted the entire market. The Turkish stock market, if you pay attention to that, is down 7%. Almost $2 trillion is gone from the United States equities market. And it's being called like one of the worst single day drops since the COVID dump in March of 2020. And so just ricocheting, shattering, echoing throughout like all global markets everywhere. And it all starts with the Japanese Nikkei, apparently. And so what happened not terribly long ago, last week really, was that a suffering, slowing Japanese economy has created just instability in the stock market in the Japanese Nikkei. Nikkei is their S&P, right? It's their stock market. And as a result of this thing called a basis trade, which is something I was learning about this morning between the United States market and the Japanese economy, since the Central Bank of Japan was offering 0% interest rates, they have still been in a ZIRP policy. There's been a basis trade because the interest rates inside of America are at 5.5%. So capital is free in Japan, but it was expensive in the United States. And so people would borrow money at very low cost from Japan, and then they would buy American equities, bonds, just invest in the American economy. But last week, the Japanese central bank raised interest rates by 0.25%, which is not that much. But when people have leveraged up a basis trade in order to squeeze the maximum amount of juice out of that trade, that 0.25% increase in Japanese interest rates has unwound a bunch of trades. So we're watching leverage in the traditional stock market unwind, which impacts our equities markets, which then cascades all the way down into what we feel in the crypto markets, which is just like an absolute hurricane because in the grand scheme of things, we're kind of tiny. That's how I would explain it in a very short synopsis. I'll explain it a little bit better in a second. But it's the single biggest move ever in the VIX term. So VIX is the volatility index. When VIX goes up, that's bad. The last big spike was, of course, COVID. So it rises above 50, and it's like kind of a 50 is just like a self-referential number. Rises above 50 for the first time since the COVID dump. And whenever VIX is kind of like an indicator of a black swan. Like if you want to determine what is or is not a black swan, you would look at the VIX. VIX spiking is like something happened that no one was accounting for. There's kind of this meme that there's like always hidden leverage in the system. And we are now very rapidly discovering that it was in this basis trade between the Japanese economy and the American economy.
Okay, so I have a few questions. I'm not exactly sure where to start, but like this is my impression of where I left things on vacation. I was barely looking at things, but like on Friday there was like a weak jobs report. Like there was the word recession back in the air. There was like felt like the market was giving back some gains. I was like, okay, normal course of events, normal course of the market, and I monitored things on Saturday. But then Sunday hit. Okay, this was Sunday the 4th. And looking at crypto
last night,
last night,
12 hours ago,
Ethereum down like 25%. Ethereum dipped like close to 2,000. Like I don't even know. Like on Binance, my understanding is it dipped to 2,000. I'm like, what is going on? Like what on earth is actually going on? And like seeing this play out, I guess in the VIX, you could sort of see this from a VIX indicator. This is similar to 2008. This is similar to the COVID March. And this is what I was feeling, David. I was feeling, oh my God, this feels a lot like March 2020, at least in terms of crypto. And of course, TradFi markets don't trade 24/7.
Right.
So
So
crypto is
what
a
the
leading
hell is going
indicator
on?
on the
Right. Yeah.
weekend. During
Uh-huh.
banker hours, during the weekends that those guys take off, crypto continues. And so you see Bitcoin off, Ethereum like particularly hit.
Brutalized. Yeah.
Brutalized, absolutely brutalized. And I was trying to make sense of what was actually going on. Of course, crypto Twitter is panicking, like complete turmoil from that perspective. But and then the Nikkei, which was trading on Sunday because Japanese
They're
time
ahead
zone
of us.
hours,
Yeah.
that was off 12%. So like
Right.
something is rotten, something is like not working in the existing system. And you're saying it all comes down to this basis trade, or is
Well,
that the main indicator?
It depends on who you are in the market. I think if you're in the crypto market, we also have to go look at Jump Capital and ask why the hell they were just offloading tens of millions of dollars of ETH into a very illiquid market on a Sunday.
Okay,
Like
that
that's
was something
also
else.
going on. That's all, but that's just for us crypto people.
Yeah.
Do have to ask that question. I think
Okay.
everyone is trying to like look into all of these different inputs into the market. And this is a meme that I think is the most viral meme of the last last 24 hours. And it's the I don't know, thank you meme. It's like the be honest meme.
Yeah.
And this person is trying to like get signal from like what the F is going on in this market. Like it's the jobs report, it's the weakening economy. And then they're like, be honest. And then they're like, okay, no, it's the yen carry trade. And the person replies, no, be honest. And the person says, I don't know. And the person says, thank you.
Thank you.
There's like other things going on. Like Kamala Harris is now encroaching on Trump's victory, and Trump is being interpreted as the pro-markets candidate. And so maybe the markets are actually pricing in a more like a not an assured Trump victory, and so that could have sent the stock market tumbling. There's leverage in the system. Who knows? There's like a bunch of things. I
Rumors
think
of war, I even saw.
rumors of war,
I
like
was seeing,
Iran and Israel are going to war.
yeah,
There's
and I
like
was
a
seeing
bunch of things going on all at once.
on Twitter there was like a signal of it was the Domino's located, the like pizza restaurants located close to the Pentagon, where like people track this apparently, and like pizza delivery orders were spiking, which means like maybe the Pentagon is huddling. So there's like rumors of war types of things in the air as well. But let me understand this Japanese thing, because maybe people don't really know where this sell-off is coming from. But I'm not sure that we can call it at this stage a smoking gun. But it seems like there's something rotten with this Japanese carry trade. You gave this to us in the intro. I just want to make sure I understand this.
Yeah, let's double down on this. Yeah.
Oh yeah, let's double down on what they're called. Like, what are we calling this?
The yen
carry trade.
The yen carry trade. Yeah.
Okay, so how does this work? What was going on? What no longer works? Like, how did this piece of the puzzle break?
Okay, so because of the devaluing of the yen, because the economy of Japan, like I don't know why the economy of Japan is faltering, and then also they're raising interest rates, but the yen is going down. The yen is devaluing. Inflation is going up, and so as a result of the devaluation of the yen, the Japanese central bank raises interest rates in the same way that the United States Federal Reserve raised interest rates post-COVID, after a bunch of cash injected into the economy caused inflation. We all know that inflation has been rampant and has really put a lot of economic pressure on like the lower half of the American economy. And honestly, like even larger than the lower half. And so as a result, like the Japanese central banks, like we don't want to have our people subjected to inflation. Inflation is bad, so we're going to raise interest rates.
Wait, so the rates in Japan, the Central Bank of Japan, the BOJ, right?
No.
Was it at zero, or is it something
zero.
very low? Is that zero? And
yeah.
It went up by 0.25%.
0.25%. Yes.
Okay. And that caused a 20% red candle for Ethereum.
That's
on Sunday.
That's correct.
Okay. And the
rationale caused the entire Japanese stock market to go down by 12%.
Okay, and because what was going on, or the carry trade, is at 0% rates from BOJ, people are able to borrow the yen for nothing.
Basically,
and then they're able to buy an asset outside of Japan, whatever that is.
United States 10-year treasuries, like Apple stock, Bitcoin.
Anything. Yeah, crypto. And then something else happens, and then they profit from this trade because they're borrowing, assets go up, they're borrowing at 0%.
They're borrowing free money and they're investing long.
So a 0.25% increase starts to wreck that trade, I guess. I mean, it's just such a slight increase, though.
It's a slight increase, but it wrecks it in more ways than one. So, like, your costs of borrowing are going up. And so now your loans that you have, or you're paying a highest interest rate on. And you might think that that 0.25% interest rate is like, okay, it's not that much higher. And you're kind of right. But also, because they're trying to strengthen the Japanese yen, that is the denominator that all these loans are marked in. So all these loans, they're trying to make the Japanese yen go up in value, which is what the loans are denominated in. And so not only are the costs of borrowing going up, but the actual value of the thing that you have to pay back is getting more expensive too. So it's a double whammy. And then you can also add on the fact that they might expect that the interest rate of the Japanese yen is also going to go up higher than 0.25%. Like they're not stopping there. And so like imagine if you're a very sizable trading firm, or you're just pulling out a ton of loans. We all know that prices are determined on the margins. And so people are maxing out this leverage trade. It's called an unwind for a reason. And so the marginal rational economic actor will take this risk up to the maximum, to the point that a very small change in interest rates will actually impact the market. And we always know, like I said, hidden leverage in the system everywhere. And so 0.25%, it increases the value of the Nikkei. A lot of people feel that, even if it's a little bit. It increases the borrowing power. It decreases borrowing power. It increases the cost of capital. And then it's also indicative of all of this getting even worse further.
I get it. So there was this point of leverage in the system. It's been in the system for a very long time. It's just, like this is why
it's compounding. People are taking more and more leverage the longer that there is a zero interest rate policy in Japan.
And this is why markets take the staircase up and the elevator down. It's like at a certain point, there's some tipping point that's reached, and then suddenly a 0.25% raise causes a cascade of liquidation. This is like bad leverage in the system, and it's all withdrawn sort of at the same time. So there's mass panic. Nikkei is down 12%. Crypto is down like 20+%.
To continue leveling up your crypto game, then you need to get on the Bankless newsletter. It's the world's most popular crypto email and is completely free. Just click below to sign up.